GDP came in stronger than expected, another good sign for the economy. While Q2 GDP, or gross domestic product, jumped 3% and easily topped the estimate at 2.3%, I'd say the numbers were not necessarily as strong as the headlines indicated. With the tariffs having a large impact on trade and business inventories, this report is the opposite of Q1, when actual results were much better than the headline showed. In Q1, companies were likely trying to get ahead of tariffs, so they were trying to load up on inventory and import a lot more foreign goods than normal. This led to a 37.9% increase in imports during Q1, which actually subtracted 4.66% from the headline GDP number. In Q2, we saw a complete reversal as imports fell 30.3% and added 5.18% to the headline GDP number. The change in private inventories was also extremely volatile during these last two quarters, considering it added 2.59% to the headline number in Q1, but subtracted 3.17% from the headline number in Q2, as many businesses were likely working through excess inventory. I bring all this up not to say that GDP report was bad, and in fact it was still a good number, but rather to show the messiness and the numbers for the first two quarters. We should not see this type of volatility over this next few months, next few quarters as we do move forward, as trade generally has a much smaller impact on the overall report. The main reason I see Q2 GDP as a good report is because the consumer, which is the main driver in the long term, held up well. There was a small 1.1% increase in services spending, and goods saw an increase of 2.2%. Considering we are primarily a service-driven economy, I do worry that goods spending could have been further pulled forward in demand as consumers tried to get ahead of price increases from tariffs. This could have a negative impact on consumer spending going forward, as they may not need to purchase many goods. With many areas of the report normalizing as we exit the year, I'm still looking for GDP growth that would likely be in the range of 1 to 2%. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.